Hey guys, Dave Hathaway bringing you another educational episode. Today I wanted to discuss DSCR loans and take a little bit more of a deep dive so you can understand them and understand how they build cash flowing rental portfolios. I am not the specialist. I want to bring on Jordan. He is the second time guest on the show. So welcome, Jordan. He's got 20 years of lending experience. He owns his own mortgage company, so he brings a great perspective. I've used him many times, so he's very trusted. So let's just get right into DSCR loans. Jordan, what is a DSCR loan?
Hey, David, thank you. I'm very honored to be your second-time guest, too.
That's right, bud.
DSCR is debt service coverage ratio loan, which is basically using the rents from the property to cover the debt, which would be the new mortgage.
Gotcha. And how do they differ from a traditional mortgage? Like, what's the difference?
Sure. A traditional mortgage would use your income, your own personal income, whether you're self-employed or W-2 employee, to cover the debt for not only the subject property, your rental property, but all your debt. Whereas the debt service loan looks only at the property itself and the debt itself. The income from the property, I should say, and the debt from the property. We don't look at all your other properties or anything like that. So if you're self-employed or not employed, it's a great situation.
So you don't have to bring tax returns to the banker or to the lender. Is that right?
Correct. Zero income documentation.
Gotcha. And how can investors use these type of loans for investing in rental properties?
Sure. For those that are self-employed and have a lot of write-offs, which I know a lot of investors I work with are, and can't document enough income to cover all of it, or they want to close in an LLC or a trust. You can't in a regular conventional traditional bank loan. Or if you're getting to the point where you're really growing and you get to that point where you have 10 properties plus, because that is all conventional allows, you'll want to go this route as well. Or if you just don't want to deal with the documentation and all that, you're able to use this type of product.
Yeah, and one of the main reasons why I wanted to have this discussion with you, not only because I enjoy talking to you, but I feel like a lot of people just don't understand that this is an option for them as a real estate investor. When I started building out our portfolio, I started with conventional mortgages for every single one. And then it got to a point where it was just painstakingly painful to bring all the rents, to justify all the charges in our bank account. And that's when I was introduced into a DSCR loan. I've been using them ever since. Are these loans that investors can use when they're flipping, when they're buying and holding, when they're buying commercial properties? When are most investors going to use the DSCR loan?
Yeah, the DSCR is going to be used for single family, or I should say 1 to 4 unit properties, and for portfolios. It's just not a short-term bridge loan for your traditional fix and flip. There is a commercial product if you have commercial properties, you're getting into that, where you can use just the debt service of the property, or multifamily housing. But traditionally, it's your 1 to 4 units. Correct.
Gotcha. So for our audience, if you are a flipper or wholesaler, DSCRs might not be interesting to you. But I will say on the counterpunch, let's say you're flipping properties or your intention is to wholesale. Your intention is a short-term hold, but you get stuck for some reason and you can't find a buyer. This is something that you could maybe get a DSCR loan for that property and then pull it back into a rental property. But then at that point, you got to have the mentality that you're holding it for long term. You're not trying to just put it in a DSCR loan and then sell it 6 months later, correct?
Correct. So I actually have a lot of clients who do have them on the market and they don't, or a situation comes up where they get a rent offer and they're like, okay, look, I can cash flow on this, maybe pull out some of the equity that I put into it on my own.
Okay.
Typically that's what happens. And you can it doesn't have to be an extraordinarily long-term hold. There are typically prepayment penalties of about 3 years. Some lenders are 5, most of mine are 3.
Gotcha.
So you're not going to want to turn around and sell it within the next year, ideally. But 2-3 years out, if that's the route you decide to go, that would be perfectly okay as well.
Yeah, I love that you're saying that. So I want investors to look at the DSCR loan as a tool, just another tool in their tool belt. Hey, I get stuck. I'm trying to wholesale this property. Hey, let me see if DSCR works. That's something they could just call you and say, hey, does this work with this property? And you can tell them yes or no.
Yes, absolutely. So what we look at, and for your own education in it, so we don't look at all the expenses. So you might have property management, you might have a vacancy rate, those sort of things, right, which you teach. This is purely your principal, interest, taxes, insurance, and if it's a condo, HOA fee, verse divided by your rents. And as long as we look for ideally a 1.1 ratio, meaning that your rents are 110% of your total expenses, because you want to cash flow. If you're in dire straits, for lack of a better term, and you need to pay off X amount of debt, and we're at a 1.0 ratio, there are products for that. But at that point, you're not cash flowing, right? You're going to be breaking even every month. But if you're coming up on a balloon on your hard money loan and you have to get rid of it, okay, or you really just want to keep the property, that is an option as well. But that is all we look at when you're calculating your debt service.
So I'm going to dig into a few things you said there, because you definitely went deep there. So a few things you talked about was the DSCR ratio, which I want to say in a minute, but you talked about how you can have a hard money loan on a property and then put it into a DSCR. And that is, I'll share my experience. That is, in my experience, that's what most investors do. They get a hard money loan on a property and then they fix it up, they renovate it, and they put it into a DSCR 30-year fixed product. And is that your experience that most investors do that and that's how they use it?
Probably 75% of the loans I do are that, yes.
Okay. And then I also want to go a little bit deeper on what is that DSCR ratio? I know you were talking about 1.1. Let's just break it down in very layman's terms. And let's use an example of a $200,000 property. How are you going to calculate what the DSCR ratio is, and if somebody can purchase that property?
Yeah. So let's say you owe on that property, right? Let's say you owe $140,000
okay,
on a hard money loan. And the rents on the property are $1,700 for a $200,000 home.
Yep.
You look at your taxes and insurance, that averages $350. You need to pay off the $140,000 plus your closing cost, some incidental cash. You're at a loan amount of $150,000. So let's say your total payment on that loan, with where rates are presently, somewhere about $1,500. Okay. So you have your calculator in front of you, Dave?
I have my yellow notepad that I'm trying to keep up with you, buddy. You're flying, and that's fine. Go with it. But yeah, let's go ahead.
At that point, we have an estimated payment of $1,500, and we'll divide that by our rents. So we're going to do $1,700. I might have told you the backwards.
Backwards? That's all right. I mean, we can always edit it.
$1,700.
Yep.
Divided by 1,500.
All right, and that's 1.13.
Oh, there we go. That's what we want to see.
Okay, so, and you were saying basically you want to stay above 1.1?
Correct. Every lender's going to be different. Some are going to be 1.1. When you get into multifamily and commercial, it's typically 1.25 to 1.35.
Okay.
And some on the 1 to 4s can be 1.0. So it's just a matter of really where do you want your cash flow as well. Not only what you can get approved, but what you want your cash flow to be at.
Yeah. Okay. So you're not even really considering the purchase price. Is that right? You're really only considering, you are, because that's what your mortgage is going to be.
Correct.
But you're mainly looking at all your expenses together and then your rents. And those are the important numbers.
Correct. Now, you mentioned that, right? You said all expenses, and it's not all expenses.
Not all expenses. That's right.
Right? Because you might, unless you're managing it yourself, you might have property management and repairs, things like that you'll account for in your analysis. But we don't look at those for this type of transaction.
Gotcha. So you're going to want to be heavier if you want to cash flow, especially with property management and some other stuff.
Yeah.
Vacancy rates.
Correct.
That you said it doesn't account for vacancy rates or anything like that, correct?
Yeah.
It's just taxes. Say it one more time of what it accounts for, just so I'm clear.
Yep. The mortgage payment itself, your principal and interest.
Yep.
The property taxes.
Yep.
The homeowner's insurance.
Yep.
Your HOA fee if applicable. So condos, townhomes, that sort of thing. And don't forget, if you're in a flood zone, flood insurance.
Gotcha. And maybe ground rent if you're in Baltimore or something else
Correct.
that's along the lines of it's fixed with the property.
Yes. Any required expenses for the property.
Gotcha. Okay. And that I like how you stated that, required expenses, because technically you can manage the property on yourself. Technically you can lease the property. Technically those are all, you're choosing to get those expenses. The other ones are fixed expenses.
Correct.
Gotcha. And then going in even a little bit deeper, and you were saying that you want to be at 1.1 or better. I mean, is there a preferred ratio that you see your best investors? I know we both mutually know Matt Derby. I feel like he is a master at this when it comes to DSCR and ratios. And what are some of the best investors? What are their ratios normally? What are they aiming for?
So someone like a Matt Derby, let's kind of count him out, right? Because we're usually hitting the 1.1 because he's always maxing out his initial leverage from his hard money lenders, right? But the average investor that's starting out is going to typically be not borrowing 100%, right? So they'll have a little bit more equity in it and they'll have some of their skin in the game.
Yep.
Okay. So you're going to typically cash flow a little bit better because you're not going to owe as much when you go to refinance after you've renovated your property and everything. Okay. So it's going to be a little easier for you, the new investor, to hit the 1.1. If it's all going to be a preference, an investor preference on where are you just trying to build your properties and, get a more and more inventory in them, right? Or are you really looking for cash flow? And it's not something that I can answer for somebody. That's more of a personal question and where you sit with everything.
Yeah, whether you want cash flow or whether you want appreciation. If I come to you and I say, "Hey, Jordan, I want a blended approach." I mean, that's how I operate. I always operate cash flow first, but I wouldn't purchase a property that I think it has no room to appreciate. I think that is penny wise and pound foolish, if you will. But if I was saying, "Hey, I want a blend of both," what range should I be in? What should I be shooting for when I'm looking at the analyzer?
I would say a 1.2.
Say 1.2.
1.2 is going to be good because that's going to provide cash flow and account for all those other figures we talked about, all the other variables.
Gotcha.
You have your fixed costs, like we said, and then your variables, the vacancy, repairs, etc. So,
and I did since you forced me to pull up the calculator, I did a quick calculation to see what was $2,000 in rents compared to $1,500 in expenses, fixed expenses, and it came out to 1.33.
Great.
So you would recommend that. I'd probably recommend slightly higher, especially in Baltimore, because I think your expenses are going to be high. So it also depends where you're investing as well.
Yeah.
What are the underwriting requirements? I know we talk, DSCR loans are no doc loans. What are the underwriting requirements? What do I got to bring to you if I want to qualify for DSCR loan?
Super easy. The first thing is an application, which I would send you, right? Any investor would send you that. There is a personal guarantee while you are closing in an LLC. So it might be, Main Street Investments LLC is the borrower. You are the personal guarantor. So we are going to look at your personal credit and your background. Typically, we look for a 680 and up credit score, 720 being the ideal mark where you want to be. Okay, to get max leverages. In most instances. Assets for reserves. If you're buying, we need to see the assets for you to close. You can buy properties with this, typically up to 80% of the purchase price. And if you're refinancing, we just need to see reserves. So that could be in the form of retirement accounts. We'll use 50% of those. and then your ID and your LLC docs. If you are a new investor and you don't have any experience in the market and you haven't taken any courses on property management, anything like that, typically we're going to want to see some sort of property manager managing them for you, and we'll have a questionnaire and some things to look at in that regards.
For reserves, or let's say I'm using a DSCR. On traditional loans, we can't always, I guess you can receive gifts and clear it up on me. Can somebody loan me the down payment for a DSCR loan so I have the reserves? Let's say grandma says, here's $50,000, put in your account. No. Okay. Walk me through.
And on a conventional loan, you can't either. You actually can, on a regular conventional loan, get gifts for investment properties. Investment properties are allowed for second homes and primaries. So you can use any sort of liquid assets, retirement accounts, savings accounts, checking accounts. You can't use HELOC funds. Now, we only look for typically 30 days of seasoning. So if you know you have a project coming up and grandma wants to put $20,000 in your account, do it now so that in 45 days, the new bank statement won't even show it. And, it'll be already in there, seasoned and everything.
Gotcha. Okay.
Yeah.
But grandma can't be no. Hey, I send over $50,000 and that is the, liquid funds.
Yeah.
Okay.
Now the cool thing, I kind of want to add this in. So It's kind of getting a little bit in there, but so let's say that you and your wife, okay. And your wife only owns 30% of the LLC. She doesn't have to guarantee the loan. She doesn't have to sign anything, but we can use her assets. Okay. But let's say you're both 50-50. Your score's 780, hers is 680. We'll actually use the higher score. But most investors don't do that. Typically, that's not an underwriting standard, but right now we're able to do that. Underwriting is letting us. So that's pretty fantastic as an aside.
That's awesome. I appreciate you sharing that. If for qualifying, is credit the big disqualifier? Like if I have 600 credit, then I'm out for DSCR loans. But if is that the only disqualifier? Is there something else that might disqualify me for DSCR?
So credit itself, credit scores tell a story, right, about the person that's borrowing. And you got to understand, we don't look at income of any kind. All we're looking at is the income from the property, but we want to see who is being responsible behind that. So that's why we look at credit, right? We look at background. If there's, if you have major felonies on there, something like that, that could certainly be an issue. Or if you have, mortgage rates on your credit, that could be an issue. Typically, your score is not going to be in the 700s if you have mortgage rates, though, So it does come into consideration. So that's why. But if I've had instances where, sometimes you miss a credit card payment, and, one credit card payment or a small Comcast collection for $100 can drop your score 100 points. Yeah. That's an instance where we can add somebody to the LLC, a spouse, a family member that you trust that has really good credit, right? And we can use their score. You'll still be on the company, but we'll use their score, their assets, and then we can use the loan like that, as long as they're willing, of course.
Gotcha. Interest rates and terms for DSCR loans, are they the same as conventional, slightly higher? Can you give us kind of a standard there?
Yeah. So it used to be about a point difference in interest rate, right? If you can get 7% on a conventional loan, it would typically be 8% on the DSCR. Cost a little bit more. That, with everything that's happening in the bond market and the treasuries, that gap has narrowed. So instead of a point difference, it might be 0.5%, sometimes less. And there's been instances lately where I've been giving better DSCR. I work for a bank still doing regular residential loans, which if you want to do that, by all means, if your title's already in your name, not in your LLC, you might want to go that route. Is it better? More often than not, yes. But there's been instances where the DSCR has actually been better and less expensive than the conventional loans.
Yeah, it's awesome that you have those options that you can go, hey, this could be better here. I love that. Closing costs for DSCR loans, are they any different than your conventional?
Typically, there tends to be in investment properties right now in the bond market, like I was just saying, right, without getting too complicated on the conventional side of things. When you go to a Wells or your local bank can get a loan,
Yep.
all those mortgages are sold in the form of bonds, basically, essentially. The desire or appetite for investment property loans has diminished greatly. So they're expensive.
Yeah.
They cost a lot more. So the typical closing costs are right now are going to be about the same, which is usually a couple points. The only thing that's ever going to differ on any loan is the lender fees. The title fees, your escrow, your insurance, all those things are constants no matter where you go, whether it's debt service loan, whether it's a bank loan, right? So the lender fees are what's going to matter. And typically there's a couple points and then your, underwriting and legal fee type of thing. And that's going to be on whether it's a bank loan or whether it's this type of loan, it's going to be very similar. The main thing that differs between the two is the prepayment penalty I spoke about. The debt service loans are typically going to have a prepayment penalty, whereas the conventional loans do not. But you can't close in an LLC. That's a huge advantage for investors that are really trying to grow their business. You can't close in an LLC in a conventional loan.
Gotcha. Why can't you close in?
It's just a regular conventional guideline, has been forever, won't change ever.
Gotcha. Okay.
Because these are for individual purposes, whereas the debt service loans are business purposes. Now, I do have debt service investors that will allow, let's say you own it in your name personally, and you still don't qualify for conventional financing for whatever reason. I have investors that'll let you close it in a personal name in a debt service loan. A lot won't, but there's some that still are too. So that's something to keep in mind. If you're questioning, hey, I own this property, it's in Jordan Weimersheimer's name, what do I do? I want a debt service loan. It is still possible.
Gotcha. I love this. I have two more questions, I think. Before I get to those last two questions, guys, if you like this kind of value, Jordan is doing this for free. We'd love it if you like the video. If you comment down, if you want to reach out to Jordan, I'd love for you to reach out to Jordan. Where can people reach out to you, Jordan?
By my phone number, we'll put that in there, 717-586-5144. You can always call, text, either way, I'm always available. My website, which will be posted along with my email.
Awesome. The last two questions is, where can you find a DSCR loan? Do you just go to whoever and say, hey, I'm looking for a DSCR? Other than reaching out to you. If somebody is some random person and they're just trying to figure out, how can I get a DSCR loan? Where are they going to go?
You want to compare, right? You want to compare. You want to see what options are out there.
Absolutely.
So I can tell you this: it's not a bank, and it's not a regular mortgage loan where there's 100 different options within 5 miles of you. Okay, there are limited options out there. So it's gonna come down to what level of service do you want and who can execute. And I can tell you this: in this realm, in the traditional mortgage world, right? Like I said, I work for a bank. It's regulated to the wazoo, red tape everywhere. Like everything is, as a consumer, you have a lot of layers of protection.
Yeah.
In this commercial space that you're looking to get into as an investor, the debt service world, the commercial lending world, it's the wild, wild west, right? There are no rules, essentially. Anybody can do what they want. So you have to be I encourage you to be very, very cautious. If something sounds too good to be true, the golden rule is it probably is. Not always, but it probably is. So do your research, work with someone that you trust. We're doing this video. You can go to Google and check out my reviews on my Google business page, on Zillow. I've been doing this 20 years. And there's some people who just get into it because they see an opportunity, and it's not for anything malicious per se, but they just don't know what they're doing half the time, and you run into a lot of issues with that. And I see it time and time again. So just do your due diligence like you will on your property, on your research, on your contractors, your property managers, all the same.
Awesome. Yeah, I agree. The last question I have for you is, and it's what I was going to ask it earlier, but what trends do you see with DSCR loans? I know you chatted about how that gap between conventional interest rates and DSCRs has shrunk and it's down, sometimes under 0.5%. Do you see that going on forever, or do you think that's going to go back to normal? What do you see in your crystal ball down there in Florida?
I had that crystal ball, sir. I don't know if I'd be sitting here doing this. So we don't see rates really. Don't ever expect the threes again. I would never do that. I've been doing this 20 years and never seen that. That's not normal. Normals, if we can get to the fives, right, on investment properties, that would be great. That would be great. Right now we're in the eights, realistically. That's where we're at. I don't see the Fed making any drastic moves. What was happening was, for a long time, the reason the rates were so low is because the Fed was coming in, right? The Federal Reserve was coming in and buying all these mortgages. So there was a lot of liquidity to keep the rates low, which was kind of artificial. They're not doing that anymore. So we're relying solely on pension plans and hedge funds to buy the mortgages.
Yeah. These
mortgages are bought by insurance companies, whatever, right? People with a lot of money are buying them. So I think it's going to be steady right now. Everything is calmed. They have come down slowly, right, from their peaks of the nines, let's say. Listen, I just locked somebody on a primary residence, a primary at 7.625, costing money. That's on a primary, right, with good credit, everything, 5% down. So I think it's going to be 18 to 24 months before we see some, really start to come down.
Yeah. And I think my big question there is, do you think it's going to go back to normal, whether it's that 1% gap between conventional and DSCR? And the other observation that I'm actually curious, I feel like DSCR, to me, where I am, and I think some investors would like to have 50 units, whatever. But I feel like DSCR is the only game in town.
It is. There is no conventional option for investors. Once you get 10, right, that conventional limit is at 10. And like you said, once you start getting into the 6, 7, 8, trying to document it's just a nightmare. I have one right now, a client that owns 15 rentals. I think 6 are in an LLC or 7. So, we're, getting documents because he's buying a new primary. He's not getting a rental, but it becomes very challenging documentation wise. And it's a lot of the times it's not worth the benefit to save, a couple dollars a month. You're literally talking a couple dollars a month on most occasions. But once you have that 10, you don't have conventional even as an option. So the debt service is really, essentially, as far as I know, is your only option short of going to a bank portfolio loan, which you'll find an absolute nightmare. And typically those are only fixed for 5 years and they'll adjust type of thing.
I'll give just a little bit of feedback there as well. Even a DSCR is not an excuse to be grossly unorganized, which I feel like sometimes people are like, I don't want to deal with it. There is definitely purposes to be organized, and it's going to help you down the road if you organize in the future for all sorts of financing, all sorts of line of credits, all sorts. Going to open up lots of opportunities. So don't just take, hey, I got this DSCR magic solution. I don't need to get my documents organized. That's not what we're saying. I don't think that's what Jordan's saying. Just saying that it does become harder with loans when you have a lot of properties and a lot of documentation. It's just harder. The banks want to see everything, and it's just a pain in the butt. But thank you so much, Jordan. Did we miss anything that I might have not asked today?
No, you were great. I think we covered a lot of ground. It's certainly a lot of information to soak in when you're diving into this. But I encourage you to reach out. I'm here to help, whether we do a loan or not. Call me, email me, text me, and I'd be glad to answer questions. There's a lot of, sometimes personal questions that don't necessarily, get answered in a general forum like this. So by all means, reach out. I'm always here to help.
Yeah, and I'd love it if you guys do reach out, or if there is a question that you think could help other people, That's why we do like leave it so Jordan doesn't have to answer the same question a million times. Even though he's super nice, he answers my dumb questions over and over. So thank you for that. But it does help when you guys leave a comment that everybody can see your question that they might also have, and you're answering their question. So thank you guys, and we will see you on another episode. Thank you, Jordan.
All right, thanks.
See you, bud.